Hello friends, welcome to this interesting video in which I will take you through the concept of liquidity in the banking system. Liquidity is the word which is being used more frequently than ever before in the newspapers, especially business newspapers and business news channels. Why is liquidity being used so frequently? Because banks are facing what is often called as liquidity crunch. Banks are struggling to manage liquidity. And RBI has realized this because there are visible signs of liquidity crunch, and as a result of that, RBI has initiated a series of measures to ensure that this liquidity problem is taken care of. If you follow newspapers, if you read newspapers or watch business news channels, I'm sure you would have come across news like this. RBI introduces daily VRR operations. Now, daily VRR operations means RBI is conducting variable rate repo auction daily so that banks may borrow from RBI whenever they have the need for it. RBI has been infusing liquidity through open market operations also, and RBI has also conducted buy sell swap. What does that mean? That means that RBI is buying foreign exchange from the banks and giving them INR in lieu of that so that liquidity can increase. So the idea behind all these three measures and some other measures which RBI has taken is to increase liquidity in the system so that banks don't face the crisis or the problem of liquidity. Now let me explain to you that what matters is, as far as liquidity is concerned, three types of liquidity in the banking system. One is called as the transient, second is the system, and third is the durable. They are not in the same sequence though. 1, 2, 3 is the way I have plotted them on this particular slide. Now, what do these three liquidity concepts mean? So, transient liquidity is just a frictional liquidity that we have. It's a very short-term liquidity problem which can be solved by the regulator through some of the measures that it can take. Okay, so essentially this is a liquidity condition which could reverse course overnight or over a short period of time. When it comes to durable liquidity, it's a liquidity which is a liquidity for long term. Okay, and this may be arising because of various reasons like changes in liabilities of Reserve Bank of India, uh, which means contraction, expansion in currency in circulation. CIC means currency in circulation, and increase in banking reserves due to unsterilized forex intervention operations. Right. So all these measures can have an impact on durable liquidity, and system liquidity basically is the overall liquidity in the financial system influenced by RBI's broader monetary policy, fiscal factors, and market conditions. So let us understand durable and system liquidity with an example, because transient liquidity is just a very short term problem. So when we look at this example here, we can see very clearly that RBI conducts, or rather RBI provides short term liquidity to banks and primary dealers through repo, which can be daily or which can be need based, MSF, which is marginal standing facility, which means you have this facility available to banks so that they can borrow from RBI at a higher rate than repo on a daily basis, subject to some limitations. And SLF is the facility which is available for standalone primary dealers. So through these three measures, basically RBI is infusing liquidity into the financial system and banking system. However, the liquidity may get withdrawn by reverse repo. In reverse repo, banks put money back to RBI. So you can see that 1,000 crore or 1,000 million or 1,000 billion, as you may like to call it, was infused as liquidity measures, while 2,000 was put back by banks to RBI. So effectively the net borrowing is negative. Why it is negative? Because 1,000 minus 2,000 gives us a value of minus 1,000. This effectively means that minus 1,000 has gone back from banks to RBI. Now you can see that banks are supposed to maintain reserves with RBI, which is what was 1500, but actually banks have maintained reserves of 2000, which means banks have effectively managed reserves 500 more than what they were supposed to keep. They were supposed to keep 1500, but for whatever reason it may be, they have kept 2000. So they have kept an additional reserve of 500. So this as the minus 1000 and this as 500 basically creates a system liquidity which is minus 1500. This minus 1500 number that you see here, okay, is nothing but indicating the fact that there is an excess liquidity in the system, because banks have first of all put money through reverse repo, and banks have also kept excess reserve. So the number becomes 1500, which is nothing but C minus F. So C is this and F is this, right? So C minus F will be giving us that number. Now you can see that Government of India also balances, or rather keeps its balance with RBI, which is given as 3000. So if you deduct, or if you rather say, H minus G, H is this number which is minus 1500 minus G which is 1000. So basically from the liquidity that we calculated as system liquidity, if we deduct the government balance, we will reach to a number which will give us what is called as the durable liquidity. So this particular example I'm sure would have given you understanding of what is system liquidity and what is durable liquidity. Here you can see very clearly that both system and durable liquidity are in surplus. So whenever this number comes as negative, that indicates a surplus liquidity, because that means that money is parked with RBI and not with banks. So we could have situations where system and durable liquidity are positive or negative. As of now, what has happened is that there is a liquidity constant in the economy which is being handled by RBI, and it is a problem which is not getting resolved very quickly. So RBI has to initiate a series of measures, right? I'm sure this video would have given you an idea of understanding the system and durable liquidity. You can look at examples which are below as well. Here there are different examples that are there for calculation. So you may go through it and get your understanding developed sharply. With this, I am going to conclude this video. I hope this video made sense for you and has helped you to understand the concept of liquidity. Please do not forget to give your feedback about this video by liking the video and subscribing to the channel. If you want to